Hey, welcome to Grandpa Sees the Blinking. Please don't take anything Grandpa says as financial advice. Grandpa's not a financial planner, and if you would, please like, share, and subscribe. Okay, we're going to talk a little bit here about a full margin account and what is a full margin account. And then we're going to go through 3 days worth of what could happen if you have a full margin account and what you could do a few trades on each one and potentially make in a tight market that we're currently running in, and I'll show you that too. Okay, so advantages and disadvantages of a full margin account. Well, first off, a full margin account allows you to buy and sell as many times as you want to during a given day. Any day of the week. You can buy, you can sell, sell. No limits. Except for you have to maintain 25,000 in your account by the start of the next trading day. If it happens where you trade, sell all through the day, and your net liquidating value at the start of the next trading day at 7 a.m. pre-market is under $25,000, you are then in a limited margin account, and you will only be able to trade 3 times in and out, and each time you make one of those trades, you have to wait 5 trading days to get it back. So if you listen to my previous live stream on limited margin accounts, you hopefully will understand that. So it will restrict you greatly. So you have to make sure that you maintain. You can dip down below throughout the day, the trading day, below your 25,000. But if you start the next day below 25,000, you no longer have a full margin account. You have a limited. And but as soon as you manage to get it above 25, you're good to go again. The second it goes above 25, you're rocking and rolling. You can trade all you want, but you have to start the next day above 25,000. That's just the way it is. Okay, so there's huge advantages to having a full margin account. The main one being unlimited trades. You can trade in and out, in and out, in and out. However, there are disadvantages, and some of the disadvantages are just as pronounced because people think, oh, I can just keep trading and I'm just going to keep making money, okay? And what Grandpa has found over the years is that is not the case, because even if you're trading a 1 minute Heikin ASHI candle chart and you have all the trades in the world that you can do, when you start moving back and forth sideways in a $2 range, okay, from top to bottom, a range is from the low side to the top side. So if you look at where Grandpa's got his little deal here, you start moving back and forth in this $2 range here from 119 to 221. Even in the 1 minute, you're with buy and sell signals, you're going to be lucky to make 50 cents or break even, sometimes lose $1 per trade. Okay, you're not going to make money. And usually around 10:30, 11 o'clock, somewhere in there, very often the market starts moving sideways. Predominantly at the beginning of the day, you have your biggest movements of the day very often take place during that period of time within a short time span, okay? And that's where you have an opportunity, if you know or have, and that's what Grandpa does, is gives a buy or a sell signal, what you should be doing. And if you jump on that bus, you're going to make some money with that buy or sell signal. If you don't, or if you push the wrong button, you're going to lose money. Simple as that. And there again, know your device. Know your computer or your phone, whatever you're using. And then when you do make your trade, always double check. Check your monitor in the computer to find out what you did or didn't do. On the computer, it's easier because it'll show you if you bought or sold. But on your phone, go in and check your orders, check your filled orders, check your working orders, so you know what the world you're doing. Because if you don't know what you're doing, did you get all your fills? You don't always get all your fills. You're going to find that out if you do a fair amount of trading. You're going to find out what the day's going to come when you don't get all your fills. You think you bought 100 shares and you might have 70 or 40 or 50. You need to look. Second you make a trade of any kind, always double check, okay? And I can't stress that enough, to know what the world you're doing. Know if you're going long. I can't tell you, it's happened to Grandpa in the past. How many people will tell me, I thought I was going long and I was going short, and vice versa. I thought I was going short and I was going long and I lost all my money. Oh, man. And Grandpa's made them errors in his past. Back when I used to trade on my phone, it was very easy to do on the phone. You put it on buy, and the next thing you know, it switches to sell. You don't notice it. You don't double check stuff. And you think you're going long and you're going short, and you think you're making money and you're losing money. And so know what you're doing. But disadvantage of having a margin account is simply the power to keep on trading when you should be waiting for the next day, thinking that you know better. Take your $300 to $500 or whatever you're going to make. Most of the guys that are doing a margin account, a full margin, they'll do 100 shares. Okay. Trees in his trucker, he picked up $1,000 the other day with his margin account. I can't remember if he went long or short or what he did, but I do know he made $1,000, and it's not uncommon to make $300 to $700 if you have 100 shares. Okay, not in this tight market. It's really tough. I think he bought 200 and he picked up a few days back. He picked up $5 and or a couple bucks. I think he did 500 shares. I think he did 500 shares and got $2. So he made his $1,000. That's how he did it. But predominantly, most of them will do like $100, 100 shares, and try, if they get a couple bucks, they make a couple hundred, and so on. Okay, and that's what Grandpa's good at and can help you with is recognizing a bear flag or a bull flag, so that you don't jump out of your trade at a loss or prematurely. So that you do get your $200-300. You can make your $200-300 with your full margin account. And when it starts moving sideways, and it doesn't always, sometimes it'll keep moving way up throughout the day. But more often than not, it doesn't. More often than not, it starts trading sideways in $1.50, $2 range. And if you want to lose money, you just keep playing. If you can't step away from the plate, they will take your money. Okay. The other thing is, and I'll give you an example of Grandpa and being what you would call greedy. Grandpa talks a lot about pigs getting fat and hogs getting slaughtered. Well, a week or so back, Grandpa went long, which he shouldn't have done in the first place, against the grain because the dominant trend was down. Okay, the dominant trend was down, and and that means it's safer to go short. You always want the trend as your friend. You always want to try to trade in the direction of the trend as much as possible, but it's also nice to buy the dip once in a while and go up. All right. And I have multiple accounts. I have margin accounts. I have cash accounts. Okay. And I'm going to talk a little bit about the advantage of having multiple accounts and how to use them here as we go along. But I want to finish my story, what happened to Grandpa, and I know it's happened to others many times. All right, so Grandpa's long, and I'm right. I'm up. I only have 50 shares at this point. I'm up. I'm up $250. I'm up $5 per share. Okay. A normal person would sell, but not Grandpa. Grandpa wanted $300 for that day, and I was only up $250. Okay. And it's fighting away up there, and I'm thinking, okay, I'm going to get my 300. I'm all ready to get out. As a matter of fact, I already have my sell in ready to take my profit, right? Well, the next thing I know, I'm down to 200. Then I'm down to 150 profit. Now I'm down to 100, and I'm thinking, oh man, it'll bounce back. I might still get it. Now I'm down to 0. And within the blink of an eye, about 3-4 seconds, 5 seconds, it dropped $5. I went from being up 250 to being down 250 so fast your eyes would water. And what did Grandpa do? I thought, well, I did a completely wrong thing. I should have just bailed out, took my $250 loss, because I deserved a loss. Because I refused to take my profit. Okay. Grandpa traditionally sells early. I'm known. If you listen to my last live streams, I complain constantly how I sold early and took my profit early. Okay, but at least it was a profit, but there's nothing wrong with a profit. But what there is something wrong with is somebody like Grandpa that doesn't follow his own rules and refuses to take a profit. And then when it turns against him, refuses to sell. Now, I averaged my way out of that mess. It took me over a week where I could have been making money on that particular account to get myself back to even and turn it into a measly $100 profit, okay, when I wouldn't even take $250. And I was lucky. I was lucky to be able to average my way out of it and turn it into a $100 profit. Hang on a second. Clutch cargo. Sounds a little too confusing. That's why I'm content with a longer range overview. The nerve-wracking is best trader for a calmer heart and lower blood pressure. I prefer to sleep soundly. Oh, that Clutch. He's a sweetheart. Lives over there in LaGrange, Illinois. And I would say that Clutch is a swing trader. That's one that's gets in and waits and kind of like Grandma does lately. But Grandpa's into this Clutch is more of a long-range trader, and there's nothing wrong with that. You can make tremendous money if you have an inkling what you're doing, and I'm sure that Clutch does. Uh, but we're talking about a margin account and in and out and taking your profits, okay? And so Grandpa should have took his profits. He didn't take his profits, and now it's turned against him. And too stubborn kicks in. How can I be wrong? I'm right 99 out of 100 times. How could I be wrong? I'm Grandpa. Okay? It's bound to come back someday, and in a margin account, they'll sell you out. If it goes too far down, the broker will sell your shares for you. If your net liquidating value goes too low, they'll help you out of your trade. But so anyway, the disadvantage of a full margin account is it allows you to trade too much. There's surveys and the odds. I can't remember what, I think it was Taiwan where they did several 100,000 retail traders. And the ones that traded 30 minutes or an hour into the day, they were the ones that were in the 3% of traders that make money. The ones that continued and traded throughout the day, the longer they traded, the less odds they had of being a successful trader. The ones that traded all day, every day, in and out, I don't think there was a winner in the bunch. And I found that to be true in my own life. And that's why I want to just do one, maybe two at the most trades per day. Is all you need to do to make your money. It actually gets boring. Grandpa said before, I get bored of making $300 a day. It's boring. And after a while it is boring. But at least it's better than losing. Because I cannot tell you how many times I've been up $700, $1,000 by 9:30, 10 o'clock in the morning. And by 12:30, 1 o'clock, I'm down, not up. I'm down $700. And I know what I'm doing. And I'm down. Because it's moving back and forth sideways. I don't recognize it right away. And I'm bored and I want to keep trading. I enjoy it. I can't do it. I don't, I'm tired. I don't want to give away my profit. I'd rather give the money to somebody else. It just doesn't make sense. So we're going to go through 3 days worth here on full margin account. But there's a couple other things I want to talk about, and that is the advantage of having several accounts, a cash account, at least a cash account, and a margin account. And you really only need enough money for one or the other. Say, for instance, you have $5,000. Okay, you can have a limited margin account with as little as $2,000. But say you have $5,000, right? So all you can have is a limited margin account, or even if you have a full margin account. Even if you have one account and you got your over $25,000 in it, okay, when the dominant trend is down, you look for sell signals, Okay, you don't want to be buying long against the dominant trend. Uh, 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 um, before I leave this live stream, I'm going to take you to the daily, and we're going to talk about the dominant trend a little bit. And then you also have the bottom pivot point. We have reached a top pivot point uh, up at 265, and we're searching for a new bottom pivot point. Until we get one, it's going to keep going down. That is just what it does. So buying long with your margin account is almost suicidal. And if you do get a profit, you better be taking it and getting out of Dodge. What Grandpa likes to do is short with his margin account and buy long with the cash account. Because when you buy long with the cash account, you eliminate so much risk, okay, with a cash account, because you're only going long and you don't have to deal with the margin, okay. Sure, you might have a few less shares than you could get with your margin account going long, but you can go to sleep at night like Clutch does without knowing that it could go against you to the bottom side and wipe you out overnight if you stay in. You can stay in that long account and still go to sleep at night, because you will eventually get out of it to the upside. Like Grandma right now, she's up there with her long account and she's waiting to get back in the green, and she will. But it might be a little bit yet, and she's been through that before. But so if you take, for instance, you only have your 25,000 or 26,000, right? The dominant trend now is down, so you want to be buying short, okay? And because the dominant trend is down. If you get a dip down, like we did the 213 the other day area, and you can call Schwab and take your money out of your margin account and put it into the cash account. Have them make you a cash account. Put the money in the cash account instantly and trade your cash account going up. Either that or have a cash account and a margin account all set up so that you can do either or. And then you go up with your cash account. Now keep in mind you can only trade that all in one time per day, but that's all you need. If you buy in and sell it the same day, you have to wait till the next day for them to put the money back in. Where with a margin account, you don't have that problem. But it reduces your risk substantially. And I don't know if you understand that or not. It's hard to tell. So let's look at a scenario here with in the 5-minute chart. We'll look at we start the day out in the pre-market. Okay, you have to have good till canceled extended enabled on your computer with TIF enabled. Okay, and figure that out on your phone. Make sure you have good GTC EXT enabled, and so, otherwise you can't trade pre-market. Okay, and these trades very often take place 5, 10, 15 minutes before the actual open to get the right direction of the market, and that's what we do here. All right, so Grandpa is trying to figure out what we have going here. We have a buy signal, and Grandpa's trying to see the buy signal. It's right here. Okay, so right at 260. So you have this big red candle. This one here is engulfed into it. It doesn't matter if this one is or not. And then you have the green candle. And this is when 4 minutes into this candle, you know it's a buy signal. Okay. And you're going to get into this trade at $220.60. You're going to end up buying this. Grandpa's going to say, at this point, just 1 minute before the open, at 9:29 a.m. Eastern Time, Grandpa is now saying, we have a buy signal in the 5-minute chart. That's what Grandpa's going to say. And sure enough, what's it do? It goes straight up. All right? And at that point, you have a chance. It goes up $2.20. You can take your $2. If you're trading 100 shares, you made $200, and I would do that. Especially as we've been moving sideways in a $3 to $4 range, a $2 profit in that kind of range is about what you can expect to get. If you're getting $2 in the last 7 days of trading, you're doing spectacular because it's so tight the last 7 days. Usually Tesla will run $5 to $10 range. But once you know you're out of that tight range, then you can look for a little more money. But for right now, if you're getting $1.50, $2 on a trade, you better take it. That's just the way it is until it switches. So you had the potential to take and make your $2, and what's it do? It goes straight down, okay? But it's not a sell signal. It's a bear flag, and we dilly-dally around, and we go back up here, and you finally get your sell signal right here. All through this whole mess here, and a lot of stress, and what do you end up with? You'll end up with $1. So you had an easy chance for $2. You could have took it. Now Grandpa's going to be screaming, sell those shares. It's a sell signal. We have a sell signal. That's what Grandpa's going to say. And you better sell, because if you don't, you're going to lose everything, okay? But if you sell, you're going to make $1. So you made $100 if you got 100 shares in your full margin account. Now, when Grandpa says sell, what do? You sell, you take your $1, or if you were smart, you took $2 over here, you waited, and when Grandpa gave you a sell signal, the next sell signal, you went short, and you picked up $1.50. Made another $150. So now you made 200 going up, 150 going down, till we got our get out signal right here. And so now you're up about $350, $400 for the day, and that's a good day. And that's the way it should be done if you have a full margin account. And so now let's go to the next scenario. Remind me to go to the daily and show you that before we're done. So I'm not done preaching about that yet. Okay, in this scenario here, we have a sell signal. Well, where is the sell signal, Grandpa? Well, it's in the pre-market, so you have to have your ducks in a row. Good till canceled, extended. Grandpa needs a drink of coffee. I'm going to lose my voice. Okay, so we have a sell signal over here in the pre-market. Big green candle followed by the body of this one fits into it, the red candle. 4 minutes into this candle, you know that you have a sell signal, and you're going to get into that thing at $221.85 right on the button, and you're going to go short. You're going to short the market because you have the ability to short the market, and you should short the market because the dominant trend is down. And what happens? You get a couple of red candles, it's looking good, you're short, and all of a sudden you get 1, 2, 3, 4, 5 green candles. Oh, Grandpa's a nut. Sometimes I doubt myself. But this is not a buy signal. These 5 candles are a bull flag. There is no buy signal there. We're still under this sell signal right here. And what happens? We go straight down, okay? And in this case scenario, you have a potential to make $3.60, $3.70 going straight down. If you got 100 shares, you made $370. Going straight down, get out of Dodge. Take your money, okay? You start making over $300 in one direction in this tight market, when you're given that opportunity this quick, less than 10 minutes, you make your $370, get out of Dodge. Now, if you wait until Grandpa says we have a buy signal, okay, in this scenario, you are only going to make $1.85. So you're going to make $185 instead of your $370. All right? Because you're going to sell halfway through this green candle, okay, with a buy signal. All right? Now here's where it gets dangerous. We're under a buy signal. If you buy this candle, you're a hurting unit because you're going to buy this candle at 220. 220. Well, what are you going to buy it at? 220. You're going to buy this candle at 220, okay? And it's immediately going to start giving you red candles and a bear flag that's just phenomenal, and I can't even it's just not pretty. Backwards, forwards, backwards, sideways movement. So if you buy immediately here, you're going to have a chance to get out at. You'd actually could get out and make about 50 cents at one point. Odds are you're going to lose money. Odds are you're going to lose money on your second trade in this scenario, no matter what you do. And you cannot buy back and forth in this tight range. Even in a 1 minute deal, you can't make money. It's too tight a range. So it just don't work. Now here at the end of the day, Grandpa's not even trading, and this isn't even a buy signal here. The buy signal is actually back here, and this is a bear flag, and then you go up. But regardless, Grandpa wouldn't be trading there anyway because Grandpa's already done trading for the day. We'll go to the next scenario, which is probably these 3 examples are about as bad as it gets for trading because we're in such a tight range in Tesla. Okay, in this scenario here, you're going to buy in at 219.50 area. Grandpa's trying to find it where I got you in buying at. Where did I get you in at? Two, oh, I'm sorry, 21965. Just bear with Grandpa a minute here. Okay, so this candle here engulfs into that one, which gives you a buy signal at 21965, and Grandpa's telling you we have a buy signal. Okay, and it goes up. Then we get a bear flag, but we're still in the buy signal. Then we get a bear flag again, but we're still in a buy signal. We're in a buy signal, and we're in a buy signal all the way up to here. And you have potential to make a whopping $2. So you made your if you got 100 of them, you sold, took you $2. You made $200. If you wait until we get the sell signal, you're going to make $1. You're going to make $100. That's it. Okay. And if you take the sell signal and wait for the rebuy signal, you're going to lose money. It's just as simple as that. Because we don't get a buy signal here, a reversal. We get a bull flag, and it takes you way up. And then all it does is move sideways because it's just a messed up market right now. We have low volume, very low volume every day, and we're moving just straight sideways in a $3-4 range. So I'm showing you absolute worst case scenario. I'll take you to the hourly again, and I'll show it to you. Jeff pointed this out to me the other day, and I've seen it in our past. I'm also going to take you to the 4-hour and give you. I got to get it on the right one here for you. Or it won't matter. Okay, so here's the hourly. Each candle is 1 hour. We got 7 days it's moved completely sideways. Okay, here we got a $20 drop. $10, $20 that you like to trade that, but going back and forth $3 to $5 is a killer for trading. We're moving sideways, so there again, if you get your $1 or $2, take your money. Okay, take your money. I'm going to show you the 4-hour for a reason here. I'll make it smaller. Here you got your 7 days over here where my mouse is. Okay, where she's moving sideways. Up here you had a stretch where it moved sideways. Here you had a pretty long stretch where it moved sideways. Here's what I was looking for. This stretch right here between 170 and 180, Tesla just loves to trade between 170 and 180. Look how long it traded in this $10 range back and forth. And a lot of that was within $5 back and forth, back and forth. Can you make money? Yeah. But you got to know that you're probably looking at getting a buck or two, maybe three. And when we break out of it, then you got your days when you're going to get your run and vice versa. Okay. But even right here, we went in the 180, 190 range for 10, 12 days. And over here, about 10 days. But this was a months in here, 2 months, back and forth. Let's look at the daily. Here's your daily. This trend line goes back 3 years. The dominant trend is down. Let the trend be your friend. right now we have a sell signal in the daily. In order to be the dominant trend to be up, you have to have a buy signal in the daily, the weekly, and the monthly. And we only have, we don't have a buy signal in the daily, so the dominant trend is down. It means the price is going to go down. And that's just what it's doing, exactly what it said it's going to do. And now, here you see the sideways movement, okay? It's going to snap. It will snap. But we need to know, we're going to have a new bottom pivot point. Grandpa will know when it changes because we will get a sell signal, okay? Or our buy signal, and we'll, at that point, once we have a legitimate buy signal, the dominant trend will be up. And that's the way it is. But until then, going against the grain is at your own risk. That's Grandpa's story, and I'm sticking to it. I hope this was helpful in some way or shape or form. But do not let your account go below 25,000. You can do the math on by how many shares you have. Don't make that mistake. You'd be better off to get out of your margin account, get out of your shares while you're still in above 25,000, and live to fight another day. Because if it continues down and you're long, you're gonna kill yourself. It's either that or you got to have enough money to put in to cover yourself. And I don't know everybody's situation. But if you get out, then at least you can do the right thing. If you're stuck in your trade and it's the wrong one, you can't take advantage of making $100 or $200 or $300 every day. Instead, you watch it go against you 300, 400, 500 every single day. Which would you rather do? But how I can be, the only way I can be helpful is to tell you whether to buy or sell at the beginning of the day. And then get out. If you do like Grandpa and you don't take your profit and you get stubborn, there's nothing Grandpa can do for you, except tell you to do the right thing like Grandpa intends to do now. I'm just going to do my trade each day and be happy with my $200-$300 and go on with life. Okay, enough preaching, and thank you for listening. Don't forget to like, share, and subscribe. Tell your friends, your grandma, and your mother-in-law about Grandpa. Have them subscribe too. And if you want to have a relaxing life, do like Clutch does and just swing trade or long-term trade and just relax. Buy when it's down and wait on it. Long-term, we're all bullish on Tesla. Hey, think about eternity once in a while. Grandpa does. I'll see ya. When will I see ya?